Okay, so I'm back to that. So you were saying that you were trying to look at this gap. You didn't know which one to pick, whether it was this gap or, come on now, this gap or this one.
No, I missed the
Oh,
one slightly above it. Yeah,
because you were looking at
Sin-
the 1 hour one.
correct.
Okay. I guess so. First off, the whole thing is stacked because this is an OB, right? The
Hmm.
whole 1, 2, 3. So the rules say take the one that's stacked. Now, if I saw this two FEGs, I would, and I missed it, like you, I would look for the break and then follow in the subsequent order flow, right? Because ISP here should be protected, and then when you get this one, you should be able to get involved, right? Because this
Hmm.
is protected. And I honestly think that this is probably a better entry. There's no, with the current strategy, there's no need to ever really chase price, right? Because while you're getting multiple entries opportunities, right? So
Right.
that's the first thing. Now, when it comes to selecting what FEG to take, so there's the rules, obviously take the first one that's stacked, but you know, if it's not clear and there's multiple FEGs, like sometimes there's 5 and 6, what you can do is you can measure the leg, like the pullback leg before the impulse, right? So
Hmm.
like this to here, and then you'll look at the one that's stacked with the 50% here, and you'll look to enter on that one. Of course, in this one, you wouldn't got tagged in, but you know, you might want to incorporate something like that into your rule that would
Okay.
help you to filter out a whole bunch of possible FEGs. Now, I only do that if there's like many, because usually I'll just follow the rule of like, you know, take the one that's stacked. But yeah, let's see if I can find an example of this. It's kind of like this, but that would be this one. You can see here, this one does get a reaction back down, but this one a better example. That's pro. Look at this one. Probably makes more sense on a lower time frame. I rarely do this myself, but this is one way to look at it. Hold on. Yeah, let's just. You carry that over, look the one that stacks. So you have one FEG here, one FEG here, right? We don't really know
Hmm.
which one's stacked. This is a pretty good example here. So you got one FEG right in here, one FEG here, you have one up here, right? So which one do we take? We're gonna measure the leg that basically produces the impulse. We're gonna go carry over and see which one's stacked with that, and that's the FEG that you take. So this can help you sometimes, like in a situation like this, when you're in a large range with multiple FEGs and there's really nothing clear that's stacked. Alternatively, what I usually do and what I usually default to doing is just going on to a higher time frame and then trying to figure out the buys, because this is probably a large OB on some other time frame. Let's see here. Actually, no, so this would be a perfect example to do that actually, because I actually don't see anything here besides maybe the BPR like this. So yeah, this is the exact scenario that you would use this thing, right? Because there's no clear
Okay.
POI stack, right? So if there's no clear POI stack, your options are either to wait or your options are to do that, right?
Right.
Yeah, that exact thing where you measure the pull into like the pullback before the impulse, right? So that one leg that initiates the pullback to then Just begin the impulse back down that creates the FEGs. Another thing would be to go from the high to the low and look at your OTE, which would be like your GAN box tool. And then looking at whatever is stacked with your optimal trade entry zone, percent blue box. There's so many ways to approach it, but I think that, yeah, having this little extra tool might help too. And the idea that, follow the ISPs, right? Just because you missed one doesn't mean the trade's over.
Right.
Let's see that here. So, you got your entry opportunity here. Let's say you missed that. Then you possibly here have another entry opportunity here, right? Because you know that this high here is protected because it's an ISP. Price shouldn't, and it's a type 1. Price shouldn't want to come higher above here. So there's no really clear FEG, right? We do have an order block, so you can enter on the order block. That's fine. You could also enter, and this is something that I'm trying to incorporate now because it's so simple, is to just enter on the OTE, cover the high. So blue box, when there's no like clear, FEG narrative, and just look at something like this because it's so easy to do. And I think we see this recently on, I think I was building a case study somewhere with this. Sometimes you don't need to go down to a lower time frame to really find an entry, right? Sometimes
Right.
the narrative is pretty clear if you just use the tools available to you to make things a little simpler. And oftentimes, that's actually what, ends up working out. Let's see here, we have a sweep here, so this in theory should be protected. So if I measure from here to here, right, and you can see we don't need to go into further detail to get a trade opportunity. We understand in theory that this is protected, and then this is the weak low to target, and we obviously have a drawn liquidity down in here and possibly below. So, when we get a breakdown, breaking structure here, we know that basically this level should be taken and this level should be protected, and we're going to pull back somewhere into the left, the dominant leg here, so we can throw on the OTE without even going down into a lower time frame. And this will help a lot with especially with trading on a higher time frame without wanting to get down to the nitty gritty of it, and just slapping an entry on here, covering the high. It's not as precise, of course, but it is super, super simple. Right?
Got it. Thank you.
Yeah, no problem. That'll help a lot. Just like thinking about the tools that you have available and trying to take advantage of them. Just like we can get on the 15-minute here, and then we can start to apply that same thinking, right? There's so many ways to approach it. Some of them are simpler than others, but like here's the impulse leg, here's the pullback that it precedes it. Okay. Which FEG is stacked with that level? It's this one, so we take that FEG, right? And there's just there's so many ways to approach this. It's ridiculous, right? You can even stack them on. We can look at both at once, right? Now you have basically a buildup of confluences here. Yeah. So you kind of have to look at what works for you with all of the tools available and find out, what entry style works best for you. Here's another one, right? Like here, and you can use both tools here. This level here, right? And that's the one that gets traded to, not this one. Now, if you do this, the reality of this is if you're favoring just entering off FEGs that like fit this criteria, you're gonna miss trades, right? If you follow the stacked one, you're less likely to miss trades. And that's why the whole system really is built to get involved as much as possible rather than, missing trades. But that's because of my own psychology. But if you, use this, and you'll probably have a higher win rate than you currently do, right? Because there's less, I don't want to say discretion, but it's less tough on your management, right?
Right.
like currently with when there's multiple FUGs, you have to know where you're placing your stops. You have to know what like the risk involved is. You have to understand, just because this FUG is the one I'm looking at doesn't mean it can't come up higher. So you're gonna have to increase the size of your stop. You might get higher RR with this system. Maybe you get lower. I don't know. But yeah, there's so many ways to approach it. You got to test it. Like the dominating concepts are all the same across the board, but then how you get involved is going to be unique to every person. So no, I can help you with that, but at the end of the day, it's all on you. All right, you know what we're gonna do? I'm gonna teach you guys how to properly do a case study because I was gonna make a video on this, but I keep thinking about it. So we're gonna do that. You guys hear me?
Oh
Yeah.
yes.
Yes.
Oh yeah.
No,
Oh yeah,
yeah.
yeah, no, yeah.
Fuck nah.
Let's build a proper case study, a real one. Okay. And no trades involved. Well, I mean, maybe, but. Yeah, nah. Yeah, nah. Show you what this is what a proper case study looks like. Okay, so we're gonna go and we're gonna find a little piece of price action. Doesn't matter what pair, none of that shit matters, right? I'll just do any random ass pair, okay? We're gonna build a proper case study here, okay? So I'm just gonna go into here and I'm just gonna fucking grab a random piece of price action. Our price starts to reverse, right? Here, June, sure, beautiful. All right. So we're gonna go in here and we're gonna start to look through price and just start mapping everything out. Right, this doesn't even need to be a top-down thing realistically. Right, as long as we decide or we determine that it's like with the bias here, that we're gonna go higher, then that's fine, that's good enough. You've taken sell side liquidity, so what happens when we take sell side liquidity, guys?
Now we are looking to take another side liquidity.
Yeah, we're looking to do something on the other side of the market, right? We're expecting a pullback, basically. We're expecting, start seeing substructure levels to start to fail, like the type 2 start to fail, right? Obviously, in this case, we don't have any, but we can expect basically to, at least come and retest this old high here, At least come retest this old high. Maybe come into, okay, we're already in discount. Discounts failed to pull us down. So yeah, we're looking at like the next area of possible resistance is just to retest the old low. And then we have like levels up in here and whatnot, and obviously levels up in here, right? Okay, so here on the 4 hour, we've dug into sell side liquidity, right? From when we've dug into sell side liquidity, we've taken sell side liquidity again here on the 4 hour. Came up, reacted to the FEG. Seen this FEG fail, right? Pushed up above. Breaking structure here. SMB. SMB doesn't actually happen here, by the way. Where does the SMB actually happen? Yeah. Right, because no body closure. We're looking for that displacement through, right? That's what actually is confirming it, right? No displacement, no SMB, because then it's likely to be just a liquidity grab, right? We don't want to trade liquidity grabs. And you can get smoked. Okay, so immediately, what do we see here again? Another draw on liquidity. All right, so sell side liquidity, we're taking that across the board. We are seeing highs being broken here, but I still want to take a step back. My thing is just to start to map out everything, just absolutely everything. There's something key here missing, and I want you guys to look here. where did this react to, right? This level here. So it reacts to this FEG, of course, this one does as well. Pushes up, it fails. Price pushes down, comes back down. There's something more that this is reacting to than this FEG, right? Of course, we have the order block, right? That's stacked on there, but we also have this inverse FEG. So what makes an inverse FEG? We want to see it come from a pivot point, an expected pivot point. We want to see it break structure and then fail, right? So if I carry this over, you can see we've pushed down, built up liquidity before the POI, which is nice. It's always nice to see. Tapped into it and then started to shoot off, right? So from here, we can start to just follow that order flow as well, right? And just start to build out, basically build out the narrative of what's going on here. Pushes up, pushes down, pushes up here. You know, what is this reacting to? Likely some order block in this region, but I'm going to go and look to confirm that on H1. Yeah, there's that breaker. So this is an overall move here is a breaker. I'm just going to make this smaller just because I don't want the chart to be an absolute mess. I understand that this is the whole up move before the down move. Breaks above it, retest it, right? Holds it as support. This isn't meant to be something so refined either, breakers. We know that. It's not stacked with anything, we wouldn't trade it. But this is more about just building a narrative and really tracking the order flow, right? Like what's happened after we've had this strong liquidity, right? How did price start to reverse? Start to study this stuff, right? Okay. So this looks all good. We're gonna start to write this H4. H1 breaker. And this is an H4 FEG. Okay, I'm just going to refine this here on the H1. So the reason for this now, why am I refining the H1 is because it keeps the whole case study clear. And I do this in live charts too, right? Like, sure, this is an H4 FEG, right? Yes, this is an H4 FEG. If I have an H1 FEG and I see that price is reacting to the H1 FEG and over like the H4, and it gives me a more refined picture of what's going on, then I'm in a favor to look at that, right? And I try to stick to minimal timeframes unless I need to, right? So you have to pick at least your 3 timeframes, you know, to map out your structure and build a bias, right? So it could be your 4-hour, 1-hour 15, it could be 1-hour 15-minute 5, it could be daily 4-hour 1, right? At least, or you know, many of them. It's all, you're always going to use your daily and your weekly, right? Those are completely different things, but you could use your 4-hour, 1-hour 15-5, right? And then unless you have confusion, then you go into those in between time frames. But if there's no confusion, you shouldn't have to, right? It should just be like your 4-hour, 1-hour 15, 5-minute. And then for entries, you can go, you know, 5, 4, 3, 2, 1, whatever, right? But your 5-minute gives you more than enough alone to be profitable. And I think that, and I was saying about this yesterday, and it might be beneficial for, you know, a lot of you guys to just stick to more rigid timeframes until you get more experienced and more comfortable, and you know, you're not losing track and confusing yourself by seeing too many different things, right? Because it all comes down to narrative building, right? Timeframes are not independent. They're all showing the same data, but they do show a different view of it. So it's easy to start to trick yourself and, you know, mess up your narrative if you're looking at so many different timeframes, right? Because, you know, there might be something that looks like an order block on one time frame that's not another one, or an FEG and this and that, right? And then you start to confuse yourself. So it's better to just stick to, you know, 5-minute instead of 5, 4, 3, 2, 1, right? You now, again, you might not see some trade opportunities, but you have so many pairs, you're probably bound to get one, right? Okay, so continuing this, we're gonna excessively map order flow, right? So price comes, rebalances this level here, pushes off, pushes down in here, rebalances, pushes off, pushes down. Balances, pushes off, gets a reaction from here, breaks down. Nothing happens, right? This is all like sub order flow. So we can start to look at it. What time of day is this, right? You can start to build in other confluences here. Here's 9 a.m. So this is just basically the whole previous day. Let's see. Yep, so this is previous daily lows, liquidity. So where is it? You got Monday, Tuesday low, right? So instead of this, we can write previous daily lows liquidity. We can also map out the whole trading week here. So if I go into Monday, 12 a.m., and you go Tuesday at 12 a.m., Wednesday, 12 a.m., Thursday, 12 a.m., Friday, 12 a.m., we're going to see how this whole trading week plays out, right? And the one before. Okay, so we can start to see each day now broken into parts, right? And we can see how this weekly bias starts to play out. So where's Monday? Monday is right here. We go Monday, start of the week, and then where's Friday? Okay, so let's see how this all plays out, right? What would we be looking for in a bullish weekly candle? If we're expecting a bullish weekly candle, what would we be looking for? We'd be looking for the open, low, high, close, right? So what does that mean, Chris?
That the low of the week, we would look to be put in first.
Yeah.
And move towards the high of the week.
So you have the open of the week, then we're looking for the low of the week, and then the high of the week, and then the close of the week. So what does that look like, right? So we have one candle here. This is the open. Then we set the low. The candle looks like this. Then we push up. We set the high. And then we come down and we make a close, right? And then you have a candle that looks like this, right? So again, the open, the low, the high, and then the close. And that's how you get a bullish candle formation, right? So what we're looking to focus on here is to figure out where that low of the week formed and what manipulation occurred to set the low of the week before proceeding to, or before continuing to push up and, you know, set the high and the close, right? So looking at this chart here on a day-to-day basis, where do you see the manipulation that occurred that set the low of the week? Right there, right? So you've set a low of the week, and this is how you guys should be building case studies, right? So now we can see the power of 3 on a weekly scale here. We have accumulation, right? Manipulation, distribution for the rest of the week, right? I just picked a random piece of price action. You know what I mean? And I have no intent here to look at trade ideas here. I'm just trying to understand my concepts, right? And I do this still constantly. I did it like every day this week. Just following price action, map it out, understand how order flow operates, understand how this smart money manipulates it to, you know, fulfill whatever need is in the market, right? Okay, so after we've manipulated, what do we call this? Right? If we've had a manipulation to the downside, a draw on liquidity, and we know that we're going bullish, so what should we start to look for?
Distribution.
Yeah, what does that mean if we have a draw on liquidity and an extra?
So we start creating the type 1, type 2s.
Yeah, we're in
Two
CO,
dots.
right?
Yeah.
We're in CO, so we can start to track it, right? So we've had our medium or higher time frame draw on liquidity, which we've had. And now we're going to look for that order flow to start to take place. Now, this is a daily draw on liquidity. So why the hell would I be on the 5-minute trying to track order flow? I wouldn't. I'd be here on the 1 hour or the 4 hour looking to track order flow, right? I personally like the 1 hour. So I feel like the 1 hour gives me a lot more details. Now let's start to track order flow here, right? So immediately we see a small rebalance in here. Small rebalance in here. Right? Price starts to displace up, comes back, rebalances this level, continues, displaces up, reacts to the order block at the time, right? The sweeping type 1 POI. Gives us a reaction. Where does it come into this FEG, right? It comes to this FEG, but where? Let's build out the concepts. It's respecting the 50%. Okay, it respects the 50%. What does that mean? That means we're in stronger bearish order, bullish order flow, right? Comes to take out this high. Doesn't give us a pullback. Well, why doesn't it give us a pullback? Because we're in a breaker, right? So it starts to hold this as support. Again, displacing away. This is what we like to see. As soon as we see this displace away, we're no longer looking at things below here if we're in bullish order flow, right? So we're going to see what happens above this level. It takes liquidity on the buy side, and notice that the impulsivity starts us just, ends. It starts to consolidate a bit, right? It starts to build up. What do we see here? Is an FEG 1, 2. Only one of these FEGs is stacked, so we can start to look at that. Let's see where this retests here. Okay, breaks up, pushes down. Let's see what if this respects 50%, comes back, respects 50% perfectly, right? Start building concepts about this stuff. We start building case studies about this stuff. Let's see here. What was I mentioning here? Continue this. What is this? This is on the Friday, so this is the end of the Friday. Monday morning comes out, takes out that Sunday low, comes, retests this week's close here. Just interesting to see. Comes retest the close to the T. Starts to push up. Okay, we can continue to track order flow. 1 hour order flow still intact here and here. And we could start to label this like this would be rule 1, right? Rule 1. Take FEG stack, right? Because there's 2 FEGs, take the one that's stacked. Rule 1. This is rule 2. 1 FEG, take it, right? This is this one has 2. Wouldn't know really which one to take here. Kind of a gamble here. You can try and apply this one. This range here down before the impulse move. Now we have 2. We don't know which one to take. We can then look at this. Take fib, take FEG in 50% of, I don't know what you would call that. Before the impulse, right? So because we pushed up, pushed out of it, we've come back into this region, continued, right? Some of these things you might not catch in real time, and that's fine, right? But we're still want to build a case study using all of our concepts, understanding them to like a really in-depth level. And that's the only way you'll be able to, on the fly, know which tools to whip out at any time. Now, you don't need these tools to be successful. That's why I never said anything about these, and I throw them in here and there, because if I throw them in all at once, they're just going to end up being distractions and doing you a disservice, right? Because you're going to have all of these available things to look at, and then it's going to cause you to basically get analysis paralysis. But the more advanced you guys are getting, the more you're going to learn that you have all of these available tools that you can whip out on the fly, to help you build a bias and get comfortable with, getting involved in and out of trades and all that. Okay, so this is all good. Let's map out structure as well. We have a swing point here. We have a rebalance here. We have rebalance here. You're going to see in a reversal, right? Because there's no, well, not really rebalance because we don't actually break structure. Okay, so, but you're going to notice that in these corrective phases that the SMBs or the type 2s, sorry, the ISPs, I should say, are not really working, right? Here we have an ISP failure. Why is this failed ISP? Because we've come into this FEG, fails to put in a new lower low. So this is the earliest sign of an SMB. Of course, the SMB point really is probably, you can maybe look at this level here or up in here. But you know, when it gets confusing, I just like to look for whatever makes the most sense, right? So we're going to use failed ISP. It's all the same narrative, right? So if it's all means the same thing, then pick what is most logically sound and what, you know, makes what's easiest to understand, I should say. Okay. Taps in here. This is also a breaker. Right, comes back in, retest this region. Pushes off. Now, am I going to trade this in reality? Maybe, maybe not. You know, I might not see this. Probably won't. I mean, it's Thursday at 8 p.m., but that's besides the point. But again, this is a case study. We're not meant to be, we're meant to go into this with like it's investigative work and try and understand price development rather than try and look at this like, hey, I can start slapping in trades here and here and here. That's not the point of case studies, okay? That's the point of back testing. Case studies is about understanding price, understanding the algo that we choose to, you know, subscribe to, the fact that there's an algo. And I mean, you can't convince me otherwise at this point. Breaker, we push down. Okay, we have an SMB. There's no body closes here, but when I just see it start chopping below here, I'm going to call this an SMB. But you have to keep in mind that there is no impulse. There's no displacement. So I'm going to label that out, right? Leg causes no SMB caused with no displacements, right? If there's no displacement, then we're not so interested in taking shorts, right? Taking shorts is probably a stupid idea. Instead, we're better off waiting here for the long bias to come in because we have impulse from here to here, right? This is the real structural leg because that's where the impulse is coming from. And this is order flow, obviously, like our S&P and ISP systems, all order flow stuff, right? But structure, we're looking at impulse legs, we're looking at swing points, right? Our swing points from here to here, our impulse legs from here to here, we're looking to basically come back into this region and then start to shoot off, right? We have a higher time frame POI from this reclaimed FEG, pushes up, impulses through it, comes back in, flips it as support, and goes. We take liquidity into it, right? So here as well, I don't want to be looking really at what's happening in here because this is not part of my narrative. It's not part of my case study, right? I just want to understand that this is not meant to be read for the price action. This is meant to be read for the accumulation before the manipulation, right? The purpose of this is not to be traded. It is to be manipulated, right? So we're going to disregard that. And I can map this out like this.
In what session does that get manipulated, Jay?
PM. PM, but that doesn't necessarily matter. It matters what happens after it.
Yeah, okay.
Like in here, the New York manipulates the highs right
Yep.
here, and then pushes us down into here, and then we see that we start to displace out. We wouldn't really be looking at it up until this point, at least, right? Because we're looking for that. This is not displacement, right? You get early signs of it here, maybe on a lower time frame, right? And then this should be respected, doesn't, right? So we're starting to see bearish order flow lose control. Then we get a displacement, comes back, rule 2, only FEG available, take it, 50% respected. There's your entry right there. And we can map that out, right? We can start adding that to the case study. So okay. Pushes down. Displacement, so we can see here that this would be our entry. Don't even need to do this. You don't need to even do this shit. Let's see what happens at the draw. Okay, there we go. There's your draw. Okay. You can even just target the range high because that's like the minimum. Okay. Rule 2 pushes up, hangs on to the BPR. Again, displaces from this region, right? Because it displaces from this region, now we're open to taking trades, right? So I'm going to go like this because I have 2 regions of displacement that lead to the same thing. Highlight this here and write this displacement, anchor, bias, trade ideas to displacement, right? Few trades available after displacement. All right, so we get displacement here at the open. Well, time of day, New York and London. Time of day, New York, London, New York. All right. So we're looking to see what is displacement. Guys, what is displacement in theory? Okay, not on the chart, but what does it represent? Why is price displacing? Why would there be a large move in the market?
Is that the moving from one point to another in the most efficient manner?
No, that's order flow. Why would displacement is a big push in one side direction. Okay.
A
It's a big
large
push.
amount of orders.
Yeah, it's a large amount of orders, right? So Johnny, displacement is an impulse. Like this, that's displacement. This, that's displacement. This is displacement. We're leaving FEGs behind, right? We're pushing in one direction. So what that signals is basically a large buy order, right? Large buy orders in the market that are actually moving and affecting price. What's going on here is not displacement, right? Like this is choppy, right? This is one directional move. This one, yes, and then it immediately kicks back and it's over, right? This is displacement, but notice where we're pushing into, right? We're pushing into an area that's against our bias, right? So we wouldn't be looking at that. We'd have to ask ourselves, you know, is it displacement or is it a sweep? Let's see here. This is our structure level. Okay. Is this displacement? No, we didn't push above it, right? It just came above, fails to close, or if it does close it immediately, it re-enters the range versus something like this. Pushes out, continues to push out. Is this a sweep? Most likely not. When we come back to this region, we can expect to continue longs, right? Because this is signaling to us that the reason for the move was not just to sweep liquidity, but it was actually to continue higher. And just like this is a perfect example of exactly what I drew out here. We displace up into this region and then pause. Right now, currently we don't know. And then we continue. Now we know that this whole thing is displacement because now we've driven higher. We know for a fact that this is not just to sweep liquidity. Had this level immediately returned back in, we wouldn't look at that as displacement, right? So similar to this here, this level here obviously pushes up in, comes back down aggressively. We already know that our bias is bullish, so we can get involved in this region. If that is, you know, too confusing, not clear enough, this one for sure, we've absolutely ripped past liquidity aggressively. And now we have FEGs to trade from, right? Versus this, right? We come past and then just start to fall right back in. So go study displacement, start to look at it, build case studies around just displacement, right? Or with everything, but put a focus on displacement, right? This is what your case studies should look like. Detailed as fuck, because this is what's going to get you to understand the actual concepts in detail. Yes, we have ISP here. We have ISP down here. This gives us a swing point. So another thing to look at, right? Now, if we're seeing this as a swing point, we have an ISP right here, rebalances. This one questionable because it doesn't break structure, but this one for sure. So what we could do is, let's move this back, is say something like this. Okay. If the suspected swing point is in a probable area, then the subsequent ISP is high probability. So what does that mean? What does this mean? Hey?
So we are in a breaker block and then we get a swing.
No,
swing
none of
point
that. None of
formed.
that. Yeah,
Oh,
no,
okay.
no POIs, just strictly structure.
Yeah. So let's see if this expected swing point is a probable area. Probable area. Because it's in a, so it is in a probable area, right?
Yeah, right. So like
And
this the whole
then-
leg, we've pushed down into liquidity. You're below ISPs, right? We're in an area that we'd like to see the formation of a swing point. And I've mentioned that we'll see breakdowns of ISPs, but we have to ask ourselves, is that to reverse price or is that to create a swing point? In this case, it's to create a swing point, right? So with that in mind, what does that mean?
Got a strong low. So
Yeah, well, what does that mean about the next ISP is what I'm asking.
right.
that's probable to continue in the direction of the swing.
Yeah, right. Because if okay, how is a swing point created?
Between two ISPs.
Yeah, so if we have a lower one on the left, we have a suspected one in the middle, like it's possible we're in the right area to form one, then what are we expecting to the right?
Another
A
ISP.
bullish ISP.
Right, so we're going to look to predict where that forms and we're going to trade it. Because we understand that if this is an ISP, then my prediction is that there's going to be a higher one on the right. I want to find out where that higher one on the right is, and I want to trade it because that's going to be a very, very high probability one. And this is how we get very high probability entries that we can actually take swing trades on. Like we can actually take long-term trades on, hold them for days, right? They're coming from swing points. It's that following ISP that comes to the right of a swing point, right? In a bear scenario, we have a left one. Let's say we're in a swing downtrend. We come up into here, ISP, form one, we get an SMB. Now we're asking ourselves, okay, if this is in the right area for a swing point, everything, all the boxes are checked. We're in a higher time frame POI. We've drawn on liquidity, all that good stuff, right? Drawn on liquidity. Now we have an FEG available, which is an area for an ISP to form, rebalance, or take on liquidity. Well, this ISP needs to hold for my bias to be correct of this being a swing point. So I'm going to try and trade it. And am I correct? Or in the event that I'm correct, I can hold this for quite some time because I'm coming from a swing point. right? This very high probability setup using the structure system. And this is it here playing out, right? We've created a swing point, right? So the beauty of this, this whole system versus all the other nonsense structure systems is we can predict the swing point before it breaks. Every other shitty structure system is waiting for this level to break before you can call this a swing point, right? You're like here to here is your swing point, and then this level only becomes a swing point after you break this swing point level that the other one created. Okay, now you missed the whole move, right? It's already too late. The beauty of our system is we get to get involved when we can predict that this is a swing point using these rules of higher ISPs on each side or lower ISPs on each side, right? Oh, build a case study about that.
Yeah.
Take a screenshot of this, right? I'll throw it in the chat right now and write some notes on it, right? Throw it inside of Notion. Or I'll even give you my Notion. I have another Notion that I've been working on for all the individual concepts. So let's see if I can
Yeah,
put
do
it
we
up
have any
together.
like Notions template for tossing case studies and then everything else in there? 'Cause
Yeah,
I think we just have like the demo trade one or the back
yeah, you do. You only have that one right now, but I have another one. But I have to go make sauce today.
Sauce, pasta sauce.
Yeah, sugo time of the year.
Oh yeah. When's the
Yeah.
wine happening?
We don't do wine. I had a neighbor though that used to make fucking bucket wine.
Nice.
Yeah, it's
Feet
pretty
Bro.
it's pretty gutty, but
That's
damn, that shit got you fucked
wine.
up.
Yeah.
Are you
Keep
even
saying, oh.
Italian, man?
Fuck out of here.
Middle
Making
name's
sauce with that
Guido.
wine. Who are you, mate? You're an imposter.
Yeah.
I know,
You go buy his grappa from the store. Come on.
Yeah. This is grapple from the start.
His name's not actually Giovanni.
Yeah.
I used to say it like a caker. Anyways, yeah, this is how you got to build. This is a beautiful case study, and you start mapping out all the concepts. Use this as a model of how you should build your case study. Start tracking things like time, because there's the three major components. This is what every case study should check out, right? Backtesting, you're not going to be this detailed, obviously, right? Not meant to be. Backtesting is meant to test your ability to see these things in a simulated environment, real time, right? Whereas case study is supposed to challenge your understanding of things, right? Backtesting is a little bit of both, right? You got to have your intuition in there as well, but you're not going to have time to map shit out like this. And it's, mind you, it's going to confuse the fuck out of you if you start mapping shit out like this on a real-time chart to try to trade it, right? But doing this is actually going to help you, at least for me. Maybe for you, if you map out like this on a real-time chart, it might actually help you. For me, it's just going to confuse the shit out of me. But anyways, there's three major components to smart money, right? As we trade it, right? ICT concept, smart money, it's kind of a mixture of what we're doing here. But let's see here. What are the three major pillars of what we're doing here?
Liquidity.
Yep, liquidity.
Draw and next draw.
That's part of liquidity.
Yeah. Consequential order flow.
Yeah, order flow. So order flow, we call that, we can just call that price, right? And the third one, so we have liquidity, price, or liquidity, order flow. Yeah.
Displacement.
No, that's part of order flow.
Oh.
Bias more maybe? I don't
Nope.
know.
Nope, that's bias is the accumulation of all
Time?
three of these things. Time, yes, time. Time, liquidity, order flow, and time. These are the three things, and this is how we build our bias, right? Our bias is built from these three things. So when you're doing your case studies, you need to make sure that you incorporate each one of these things, okay? So we have liquidity, like we have our manipulation is a form of time and liquidity. We have liquidity here. We're reading liquidity. We're reading order flow in this case. And where are we reading time in this case, in this all of this?
It's Monday to Friday.
Monday to Friday, and what happens in that time?
Low of the
power
week
of
is
three.
made on Thursday.
It's a Friday. It's a
Ooh.
Wednesday. When does the low of the week and the high of the week usually form? Tuesday to Wednesday,
Oh,
right?
sorry.
Yeah, it's a Wednesday. But I mean, it could form on a Thursday. It could form on the Monday. But usually, when we're seeing this model play out, the power of three model that's setting the low of the week, the low of the day, we're looking at for that, in a Tuesday, Wednesday scenario, right? And it's beautiful how that happens. Sets the low of the week, pushes
Yeah,
up.
on NFPX knows to create like on Friday low of the week and then just runs.
First Friday. Is that the first Friday? No, it's the second Friday.
No,
First
no, I'm
Friday.
just saying like you sometimes it happens.
Yeah, I think. Wait, maybe that is. Oh, Friday. Here's first Friday. This should be NFP somewhere in here. Ooh, right here. NFP's nothing crazy anymore. Okay, anyways, so yeah, this is checks out liquidity, checks out order flow, checks out time. There's also time in here when we look at our displacement legs, time of day, London displacement, New York displacement, right? Because we're looking for these things to happen when sessions are in play, right? Because that's when most of the Forex market is in business. Most of the indices market is in business, right? Because indices and Forex, these are not just traders, okay? Traders make up a big portion of it, yes. Speculators probably makes a smaller portion of it than we think. Most of it is investors, right? Investors and businesses, corporations, even countries, right? There are countries that are invested in indices, right? They're hedging. There are hedge funds. There are multinational corporations, right, that are hedging their money because they don't want to have a shit ton of cash. There's risk involved, right? So they want to have a diverse set of assets, right? So they have to be able to constantly be trading in indices and in Forex and, gold or whatever, right? They're not fucking trading altcoin, Litecoin shit, right? Like they're not doing that, right? So that's why when I see people like trading these with crypto, like maybe it works, but I just find it kind of funny because the whole logic around these ideas is that algorithms are creating an efficient market for transactions to take place, and why the fuck would they need that in Dogecoin? But whatever. Yeah. So anyways. Okay, so yeah, that's liquidity, order flow, and time. So there we got our three pillars of smart money. Take a screenshot here, slap it on in case studies. Boom. And I'm gonna show you guys now because I will be here all fucking day doing this. So I'm just gonna do it, show you guys how to do it in Notion. But let me pull this up here. Let me switch my screen. This one's recording. Good. So I'm gonna show you how to log these case studies here in Notion. Okay, so I'm in Bobbins. Oops. Here we go. Oracle trading. All right. So can you guys see my screen?
Yeah.
Yeah, one sec. I just lost my Zoom for some reason. Okay, so I started to build out this. Okay, so this is a little complicated. All right, of how we're going to do this, but this is going to be your concepts thing, and you're going to have all of the individual things here if you want, and then we'll have one that's just called case studies, right? Would you guys actually, I think, yeah, this is actually a stupid way to do it now that I think of it. I should just delete this.
Why?
Because I'm thinking we can just do case studies and then give them tags that would sort them instead of having all of these separate ones for screenshots.
Yeah,
Right?
that's true.
Yeah.
Like, yeah.
So here, I'll show you how this is done here. So I go to the page. Those case studies. Right. And with case studies, we don't need anything like RR, none of that that shit is strictly just for. What the fuck? It's strictly just for logging and learning, right? Investigative work. Right, so we'll put your tags in. We got type 1, OB, we got breaker, we got FEG, we got reclaimed FEGs, we have power of 3, we have what are the other ones we have? Can do that one here. What is this? Suspected swing? Okay, we'll call it that. Suspected swing. Right, we have so many concepts here. Power 3 we have displacement. We have failed ISP, we have SMB, we have so many concepts, so many concepts. We got rule 1,
Asian range.
rule 2, rule 3, Asian range, session range. Sometimes it's London. We have session range. We have draw on liquidity, next likely draw on liquidity. We have is it a reversal? Is it an expansion? Oh, it's called continuation. I'll call expansion because that's the term we've been using. Expansion. Is it a retracement? Is it a whatever? Is it the
Breakaway gap?
breakaway gaps? Right, that's kind of rule 1. But we'll do it. Breakaway gaps. We got I'm gonna get these expansion retracement stuff out of here. Reversal. Okay, here. So now you have all of these different concepts here. I can edit the view here. We're gonna make this one a layout. We're gonna put this into a gallery view. Delete, delete. Right. I'm gonna take a screenshot of this. Notice I don't even need, in this case study, I don't even need to go into the higher time frame and map everything out, because I can already see everything that's going on. This case study is so beautifully built right now that I can understand the higher time frames, what's going on. Like I can see what's going on the weekly time frame with the manipulation to set the high of the week and all that stuff, right? So I can, for me right now, I can just have this screenshot and that's more than enough, right? Slap that in there. This should show up here. Yep. Okay, beautiful. And then we can go here, actually, gallery. We can maybe go board. Yes, board. Other than I can just slap these all in here. So if I go 1, I'll just put 1. Okay. Actually, you know what? I'll do, yeah, 1. Okay. And give it an ID. Okay, it's got an ID. Now I should say 1, 3, whatever. It doesn't really matter. And I'm gonna put a little thing there, a little smidge. Like this. There we go. Tag. So I'm not going to tag everything because everything's really in here. So we're just going to put, what would the word be? So like a complete case study, this is everything, right? All concepts. Right. So then if I go here to here, I want these to all show at the photo. How do I do this? There we go. There we go, right? And you can order these in any way you want, right? So anytime that you put a case study in, you just come in here and you click if you just want a case study that's related to just one thing or multiple things, then you can just click it. It'll automatically apply the tag. You open this up, right? You type it in, you put your screenshot in, suspected swing here, and you're going to have it pop up over here, okay? Now you're going to have all your concepts like this. All right. Now let me share the link here to you guys. I overthought this hardcore, and then you guys come on and it cleared my mind. I have to publish this, publish to web. Okay. Yeah, that's way easier. What the fuck? Why didn't I think of this in the first place? All right, so if you go to the Notion section, case study Notion database. Alrighty. So someone open that up and see if you can duplicate that. Okay.
Yeah.
Now, if you ever want to add a different concept tag, you're just going to go click any of these, right? Just click any of them, put it in here, put 2, whatever. And you're just going to change this here. You're going to go to tags. You're going to just type something new in. You're going to go bobbin, right? And then you're going to see it pop up at the end. Then you can reorganize it. Okay. Then you can delete the pages, delete it, delete the tag if you don't want it anymore, right? That's it. Nothing else to it. Now you can have a collection of case studies. You can even put your case study and EOD review. Okay. So you can put your EOD markups here as well if you want. Okay. Because EOD markups are case studies. Understand order flow and all that stuff. Right. So let's see here. I got a few more case studies for you guys. Let's see here. We got this one I just did yesterday. Talk about that one. Let's see what else here. I got this one. We got some new concepts coming out too, like divergences, which I'll show you a little example of what that looks like here. I'll put that in case studies now.
All right, that was duplicatable.
Yeah, cool. Perfect. So there are, oops, what the hell just happened? Oh, yes. So there you have concepts of divergences, which we'll talk about. All right, so that's another one you can put in there. Divergences are a signal of reversal. So to keep it short, you can compare 2 correlated pairs, and when they come out of correlation, then you expect a reversal. So for example, if we have the EU here, comes up, makes a higher high, and GU makes a lower low, we can expect that this is seen as a sweep of liquidity, then lower prices, right? So reversal. You can also look at this like on the DXY. If you have a higher low on the DXY, but instead of making a lower high on an EU, you would make a higher high. You'd then look at this as a reversal, right? Because it's showing weakness and it's showing that this is in fact a sweep. Another one would be NQES, right? So GU, EU, GU, EU or NDXY, AUD USD with NZD USD, right? And this is applicable on all time frames. So you'd like to monitor multiple pairs at once, which is what I always do. All of the pairs that we trade, they're all related to each other, right? the Forex majors are all related to each other. The indices are all related to each other. That's why they're picked like that, because they're all working together, right? So we'll talk about that as well, but not right now. It's part of, it's in the video log. I just recorded that one yesterday. Let's see, do I have any more? Yeah. So that's it, right? This is how you should build out your case studies. Any questions, concerns, anything you guys want to bring up today?
No?
All right, let's look at charts for 5 minutes and then we'll see if anything lines up. Doubt it, but
Got big news at 10 too, right? Or some
Yeah.
news.
yeah, we got some news at 10, but it's FOMC. It's going to be heavily manipulated.
Yeah.
This could be the driver that initiates a reversal from here. So this is what I'm curious to see right now. Not a reversal that's going to come put in new fucking swing highs, like higher
Just some
time frame
case studies there.
weekly, monthly highs, but
Very
Um,
case study.
yeah, I heard him the first time, mate.
Mate.
Just make
Yeah,
Okay.
nah. Yeah, nah. Yeah, nah. Ole, how are you, bro?
Huh?
How are you? How's your weekend?
Well, it's just starting, dude.
Oh, true.
Just, Friday or Friday night.
Friday night, yeah. I always just think I always just immediately think you're a day ahead of me.
Well, technically, yeah, pretty much. But it's just like morning till night.
Yeah.
Like, sorry, I'm at night. You're in the morning.
Yeah. Because I'm like having my morning coffee and you're like, oh, fuck, man, I'm at a bar.
Yeah.
I'm like, what?
Fucking 7 drinks deep.
He's like, dude, I'm fucking smashed. I'm like, what do you mean? I'm like, oh, yeah, I forgot. It's that time of day.
Yeah, Brian asked me the same question. He's like, "Are you on the pints already?" I'm like, "Nah, man."
And I'm just like, yo, I should
Yeah.
It's like, well, fuck, dude, if it's evening over there,
Yeah, it's 5 o'clock somewhere, mate.
it's evening over here.
Just have an Irish coffee.
I love those. Okay,
Mhm.
so I mean, still expecting that reversal here. It's possibly shaping up. We've gapped above, interestingly enough, here on the DXY. So we've actually opened here, closed here, opened here, pushed up initially, and now I've come to close that gap. So I'm curious here if it just wanted to come close that gap or if this wants to continue to push. If we show weakness from this region, I'm pretty much set in stone that we're going to come down lower. Yeah, I don't want to marry the bias yet. But if we do start to see the signs of order flow shifting, this is not the order block, the order block's here. But anyways, type 1, yada, 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 all the same shit, right? Semantics, blah, 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 blah. Comes up into here, respecting the 50%. Nice to see, right? Applying our concepts. You start to learn to pull out all these tools when you're doing case studies constantly, right? I would rather see you guys do one detailed as fuck case study every single day than do 30 fucking case studies where you just go and you start slapping on charts, trade ideas or the RR tool in the best case scenario, this and that, yada, yada, yada. You know what I mean? That's not going to help you, right? Your case study should be investigative work. And you know that one of the case studies that I did a couple days ago took me like an hour, right? I doubt they're not going to take an hour. The one we just did probably took almost an hour. So yeah, they take some time, but you learn a whole lot, and then you can go review them. Now that you have a Notion database, you can come in here and you can look at these and study them, read them, review them, study them. You know, you have to do that constantly, man. I'm still constantly making fucking case studies, and then it ends up just becoming second nature, right? Like I just open up a trading view in the middle of the night. I'll just scroll to a random piece of price action while I'm thinking about something, and then I'm just making a case study. It's like therapeutic. You know, fuck, man, I'm a nerd, but it is what it is, right? That's how you get good. That's how you get good, man. All right, so coming up in here, we're seeing this big push up. Liquidated both sides, failing to displace higher though, right? Now we're expecting that this gets taken out, we take out the high, right? And we're not expecting to take out the low immediately, but we might be seeing earlier signs of a reversal. So today's not really going to give us much. Monday's probably going to be a write-off too, but I'm thinking Tuesday, Wednesday, Thursday, Friday, I think we're going to get a nice pullback. It's possible that we just do continue to range in this for a bit. Maybe 2 weeks later, we get the pullback, but yeah, let's see here. If this closes like this, we'll probably get a range candle the next week, kind of like this. So after impulse, after we get large bullish candles, you're going to expect range candles to start to form, right? That's what we're getting here. We're going to expect range candles start to form, right? So we're going to end up, if we are going to roll over, we're going to end up like a week or two, at least probably a week of, you know, this, right? This is how markets operate. You go from trending to ranges to trending to ranges to trending to ranges to trending to ranges to trending to ranges, right? And this is how markets constantly moving, right? Different market conditions. So we can use this logic and just get a rough estimate. Now, don't take this as fact because it's not. It's just basically a form of mental preparation for me to understand that there's a possibility here now that we've hit a higher time frame POI, we've had a draw on liquidity, we've had consecutive bullish candles. There's a pretty real possibility that we start to go into a ranging market. So why would I want to push with that in mind, right? Why would I want to push? We've been pretty aggressive all throughout here, taking shorts, right? Why would I want to start to push and start swinging for the fences at this point? I don't. Right? Unless we start to reverse and I can get a good entry that I can hold down into some, you know, higher, sort of some liquid region that's lower and higher on the EUG pairs, right? But just a form of mental preparation, right? Now, if we do start to get confirmations that we're going to go lower, then we can start to look at that. But I'm just going to assume that it's a range because we're basically stuck between the substructure levels in bullish order flow and a higher time frame POI. So with that in mind, I'm not going to expect that price really does much. It's going to do a little bit of this, going to manipulate before driving lower or manipulate before driving higher. Right? And that's it.